So today I want to discuss an ongoing relationship between OpenAI, Nvidia, and Oracle, and the way that relationship is becoming financially untenable as OpenAI continues to burn through money in order to realize their AI ambitions, which is costing a lot more money than it's able to make. Again, it's the willy-nilly way in which they're doing business and arranging deals with as many entities as possible out of sheer desperation.
OpenAI is panicking, and the cracks in its empire are getting impossible to ignore. The Oracle and Nvidia collaboration that was supposed to power the future of AI is now on the edge of collapsing under massive costs and shaky deals. What was sold as unstoppable dominance is starting to look more like a high-stakes financial time bomb.
Money, ladies and gentlemen. OpenAI doesn't have money. That's the problem. At least their own money, right? They don't have their own money. They're not for profit. They're trying to become for profit. They're not for profit yet.
What's happening right now with OpenAI is starting to look less like a tech success story and more like a financial pressure cooker. On the surface, OpenAI is still being treated as the face of the AI revolution. They're the brand everyone recognizes. They're the company people associate with generative AI going mainstream. But underneath that image, the numbers are getting scary.
Talking about how when you look at how much money they're spending, it's growing at a more rapid pace than originally anticipated, and the amount of money that is being intaken, the amount of revenue, is just nowhere near enough to make up for the amount of money that OpenAI is losing.
This is no longer just about building cool AI models. This is about sustaining an infrastructure footprint that looks more like a national power grid than a tech company. The cost of running AI at this scale is exploding.
There's also the fact that it's not just expensive to build data centers for AI, but also to maintain them due to how much power they consume. So, we're talking about an infrastructure that could cost up to $500 billion in annual spending.
And here's the problem. OpenAI's spending is growing faster than its ability to monetize. Revenue is coming in, but it's nowhere near keeping pace with the burn. Analysts and investors are openly questioning whether this model can ever sustain itself without constant outside funding. That's why people are saying OpenAI could face a real cash crunch by mid-2027 if this trajectory doesn't change. This is why the story has shifted. It's not just about innovation anymore. It's about survival. And that's where Oracle enters the picture in a way that completely changes the stakes.
So, Dom, we're getting fresh insight into Oracle's blockbuster cloud revenue numbers. The Wall Street Journal is reporting that OpenAI has signed a $300 billion deal with Oracle for cloud computing power, one of the largest such contracts that we've seen. That goes well beyond its current revenue.
Back in September 2025, OpenAI signed what might be one of the most aggressive cloud deals in tech history. A $300 billion 5-year contract with Oracle, starting in 2027. That works out to about $60 billion per year in cloud spending. Not revenue. Spending. That number alone should make anyone pause. That deal effectively turned OpenAI into a company locked into a massive fixed cost structure for years to come.
We will invest a great deal of money, probably the largest investment we've ever made.
The Stargate project tied to this deal shows just how extreme this is. Oracle is building massive data center capacity in Texas to serve OpenAI's needs. These aren't normal facilities. These are hyperscale AI complexes designed to run tens of thousands of high-end GPUs around the clock. We're talking about infrastructure that costs tens of billions before a single dollar of cloud revenue is realized. That's why this deal didn't just change OpenAI. It fundamentally changed Oracle too.
So Oracle just had this big announcement. OpenAI is going to make a huge investment with Oracle. They're going to invest over $100 million into Oracle. How the fuck are they doing that if they don't have any money?
Oracle is no longer just a cloud provider in this story. Oracle has become financially exposed to OpenAI's success in a way that's hard to overstate. To support Stargate, Oracle is Stargate. Oracle is planning to buy roughly $40 billion worth of Nvidia GB200 chips, around 400,000 units, just for one major site. That's an enormous capital outlay.
Predicting that by 2030, we're looking at 100 gigawatts of power demand in the US alone due to AI.
To make this work, Oracle is also planning to raise up to $50 billion in debt and equity in 2026. Think about that. Oracle is borrowing and issuing stock at a massive scale, not just for general growth, but specifically to build infrastructure that depends on OpenAI being able to pay its bills for years to come.
While their endeavors are ambitious, they need so much freaking money and are burning through so much freaking money that the amount of money that they're intaking cannot keep up with the amount of money that they're burning. And so they're relying on every single deal possible, every single investment to support their endeavors.
And this is where it starts to feel less like a strategic partnership and more like a high-stakes gamble. Oracle's credit risk metrics are already flashing warning signs. 5-year credit default swaps have spiked to roughly triple historical averages. That's the market quietly saying, "We see risk here." Oracle is expanding aggressively before OpenAI's long-term cash flow is guaranteed. That means Oracle is spending first and hoping OpenAI's fundraising and revenue growth will eventually cover it. So now you have this situation where Oracle's financial health is increasingly tied to OpenAI's ability to keep raising money and scaling revenue, in an environment where OpenAI is already burning massive amounts of cash just to operate. That's not a normal customer relationship. That's a dependency.
So, for example, it was expected that OpenAI would lose $14 billion in 2026. Those projections are now looking very conservative when you look at the fact that in just the first half of 2025, they only made a revenue of $4.3 billion compared to a net loss of $13.5 billion, which is close.
And this is where the whole structure starts to look fragile, because OpenAI's ability to pay Oracle depends heavily on continued outside investment. It depends on Nvidia, Microsoft, Amazon, and others continuing to pour money in. It depends on AI demand staying red hot. It depends on OpenAI staying competitive with Google, Meta, and others. If any one of those assumptions weakens, the entire chain feels it.
If we were to reach that point, predictions say that in order for this to be feasible and viable for this company, OpenAI would have to make roughly $2 trillion in annual revenue. And even with
OpenAI needs Oracle's infrastructure. Oracle needs OpenAI's money. And both of them need the AI market to keep expanding at breakneck speed to justify the scale of what's being built. That's why this feels less like a growth story and more like a balancing act on a very thin line. One wrong move, one slowdown in funding, one major competitive shift, and suddenly what looked like the future of AI starts to look like a very expensive overbuild. This is where Nvidia enters the story, exposing how fragile this whole setup has become. Because for a while, Nvidia wasn't just a supplier to OpenAI. Nvidia was starting to look like a financial backstop.
Back in September of 2025, GPU-making company Nvidia announced that they'd be investing up to $100 billion in OpenAI. This was an announcement that was made to the public, with Nvidia kind of shifting further away from consumer electronics and delving more into AI due to the profitability.
Back in September 2025, Nvidia sent out what sounded like a massive vote of confidence. A letter of intent outlining up to $100 billion in potential investment and up to 10 gigawatts of compute capacity for OpenAI. That's not a normal partnership. That's Nvidia basically saying, "We're willing to help bankroll your future." On paper, it looked like OpenAI had a safety net. Phase 1 alone was supposed to be 1 gigawatt of compute coming online in late 2026. That's millions of GPS worth of firepower. It sent a clear signal to the market. Nvidia believes in OpenAI so much that they're willing to put serious capital and capacity behind them. Then the tone quietly changed.
Nvidia suddenly got cold feet, and apparently part of the reason had to do with Jensen Huang, the CEO of Nvidia, privately expressing that there's a lack of discipline in OpenAI's.
Suddenly, Nvidia starts clarifying that this wasn't a binding agreement. Then reports start leaking that Jensen Huang privately raised concerns about OpenAI's lack of discipline. That phrase alone says a lot. In corporate speak, lack of discipline usually doesn't mean someone forgot to file paperwork. It means spending is out of control, strategy is scattered, and deals are being made faster than the business model can absorb them.
We are going to make a huge investment in OpenAI. Yeah, I believe in OpenAI. The work that they do is incredible. They're one of the most consequential companies of our time, and I really love working with Sam. And we just haven't made the investment in them because they're closing their round. But we will definitely be involved in their round.
Reuters reports that OpenAI has been unhappy with Nvidia's inference performance for certain workloads. In other words, for some of the things ChatGPT and related systems need to do, Nvidia's chips aren't fast or efficient enough in the specific ways OpenAI now cares about. That matters a lot. Inference is where real-time AI happens. That's where user experience lives and dies. So what does OpenAI do? They start shopping around. They cut a deal with AMD for 6 gigawatts of GPUs. That's not a side experiment. That's a massive commitment to Nvidia's biggest competitor. Then there are talks with inference-focused startups like Cerebras and Grok. These are companies building hardware specifically tuned for certain AI workloads, especially inference.
Due to how much money they're burning and how they need every $1 billion possible, every deal that can mitigate the burning of money, and any deal that can put them ahead in the AI race, even if it means having to seek alternative partners who can provide chips that are better suited.
From Nvidia's perspective, that's not great. Nvidia's entire strategy is to be the dominant default provider of AI compute. The moment your biggest customer starts testing alternatives at scale, the power dynamic changes. It introduces competition where Nvidia wants lock-in. Then things get even messier when you look at the money flow. Because this isn't just Nvidia selling chips and OpenAI buying compute. A circular system is forming, making the whole thing feel like a financial merry-go-round. Nvidia funds OpenAI. OpenAI uses that money to pay Oracle. Oracle then turns around and uses a big chunk of that money to buy Nvidia chips for data centers. On paper, everyone shows revenue. In reality, the money is looping through the same 3 companies.
But then, looking at the money, we're looking at a company that lost $12 billion in a single quarter, according to Microsoft. We're talking about banks estimating $143 billion in cumulative negative cash flow.
Investors are starting to notice this, because this kind of structure doesn't create real profit in the long run. It creates dependency. Everyone becomes dependent on everyone else, continuing to spend at the same pace. That's why people are calling it financial engineering instead of innovation. And then you get to the part nobody wants to talk about too loudly. The math. OpenAI is pulling in roughly $10 to $13 billion in annual revenue. That's a lot of money by normal company standards, but it's not even close to enough when you stack it against what's coming. Once that Oracle deal fully ramps, OpenAI is looking at around $60 billion per year in cloud costs alone. That's before you even factor in salaries, R&D, power, cooling, new hardware, acquisitions, and everything else. While OpenAI, Nvidia, and Oracle are busy trying to hold this very expensive tower upright, the rest of the tech giants aren't standing around clapping. They're quietly sharpening knives.
Hey, good morning, Carl. So the money lining up behind OpenAI, it tells you something. Some of the biggest players in tech, they're betting that OpenAI can take back the narrative of the next model cycle. An OpenAI comeback after Code Red, months of sliding down the technical benchmarks, rising pressure from Google's Gemini. Now its next model, GPT-6, it's expected.
Google, in particular, is playing this in a way that makes OpenAI's situation look even more uncomfortable. Google doesn't just run AI models. Google designs its own chips. Its tensor processing units are built specifically for AI workloads. And now Google is pushing hard to make those TPUs fully compatible with PyTorch, which is basically the language most of the AI world already speaks. That's a big deal, because it lowers the friction for developers and companies to move workloads off Nvidia hardware and onto Google's ecosystem. And unlike OpenAI, Google isn't renting its entire future. Google owns its stack. Chips, data centers, power relationships, cloud, models, all under one roof. Sam Altman goes out of his way to say how much OpenAI loves Nvidia. Nvidia says everything is great and there's no tension. Oracle says they're highly confident in OpenAI's ability to raise funds and meet commitments.
And according to this analyst, no startup in history has operated with losses on anything approaching this scale. Just Sora alone, one of OpenAI's AI systems, is burning $15 million a day, which is $5 billion annually.
This is where the tone matters. When three massive companies all feel the need to publicly reassure everyone at the same time, it's usually not because things are calm. It's because someone is nervous. This is classic corporate behavior. When things are actually stable, companies don't feel the need to constantly repeat how stable they are. The messaging becomes louder as the pressure behind the scenes rises. And investors aren't blind to that pattern. Look at Oracle's stock. After running up hard during the AI hype, it's unwinding. That's the market slowly re-rating risk. Oracle is now viewed not just as a cloud company, but as a company that has tied a large portion of its future to a single extremely expensive AI bet. At the same time, Oracle is reportedly planning to cut tens of thousands of jobs to fund AI infrastructure. That's the part of this story that doesn't show up in glossy AI presentations. So you end up with a strange situation where AI is sold as productivity magic, but AI funding comes directly out of payrolls. Investors are starting to see that. The human cost of AI capex is becoming part of the financial risk discussion. Now swing back to Nvidia, because Nvidia is in a bind that's almost comical if it weren't so serious. OpenAI is one of Nvidia's largest customers. If OpenAI slows down, Nvidia feels it. If OpenAI fails, Nvidia loses a massive demand engine. That alone gives Nvidia an incentive to keep OpenAI alive. But if Nvidia keeps funding OpenAI, and that money just flows in circles through Oracle and back into Nvidia hardware, Nvidia's real returns shrink. It looks good for revenue. It looks weaker on actual profit and strategic control. So what does Nvidia do? It hedges. And at the center of the web is a simple question that cuts through all the hype. Is OpenAI still leading, or is it just burning out?